Hello, Warriors. Good Jackson Hole Day. Want to welcome our viewers from investing.com. Thank you, Alexander, was my wife. Thank you, Forex Gal. Mr. Dale is okay. Brock. Who else is here this morning? Ren, how are you? Nikita's hoping for gold to go either way. That's flexible. Kevin, hi. How are you? Okay. All right, everyone. So this is probably the most publicized seminal speech by Fed chairman, highly publicized in advance, that I've ever seen for a Jackson Hole get together. Okay, so not sure what kind of impact it's going to have. The best guess is with what he's saying, leaving trying to get the inflation level up, accepting more inflation, you would think would be dollar negative. Perhaps that's the reason for most of the week being range bound, directionless into this. And I remember Saturday having a hard time having an opinion of directions and things like euro, and this is pretty much what we've done, and pound has been outperforming. But I did have conviction based upon this candle that we had last week. It was this one, okay? And it came off also, a chart of the day showed it. I thought that this was a hope candle, a hope hold, and look how we rallied when I was talking about it. We were around 90-30, 90-40 for the sale up there. To me, it looks like we're on the verge of a breakdown. Underneath the support level, there's plenty of room. Some confluence here at 87.40 at 61.8 back of this. So that's what I think we could do. I know their targets are even lower. Some people are looking for this from here, which would be real deep, like 83. But it goes to show you that you go with your highest conviction ideas, and you don't have to know where everything else is going if you have a chart that's giving you market messages. And that candle last week and the chart of the day, that action was pretty negative. And if you didn't sell that close, you waited for a bounce to get in. The market accommodated me and other sellers up there, 89.20 to 40, and now we're sitting on a shelf. To me, it looks like Wile E. Coyote on the ledge before it breaks off. So you're wrong back over 90-30, and even from here, it's not a big risk when you see what the potential downside is of euro pound. Okay, so looking at US dollar yen, I said I really have a hard time getting bearish yen because I thought that what happened in yields, so TLT hasn't done anything right yet, and the 10-year rallied back to the highs. It's coming off, but we get through 72. You could start thinking about 90. All right, here we are up towards this level. This looks like about 90. So you would think with Jackson Hole, and he's going to be talking about, I saw an excerpt of keeping rates at zero, under zero, around for 5 years. 5 years. So that's going to be a real big test for the Fed to see if they could keep rates there. And if people are willing, with that going on, to buy our long-term paper. And if you're a dollar bear and you're right about a depreciating dollar, I don't think the Fed can keep at least longer term rates. They don't control it. that people are going to want to be paid more to take the risk of holding a depreciating currency. And also with all this new supply that's going to be part of the whole deal from all the rescue packages that we've already had and more to come. Any questions on that? So as long as I see yields heading up, I can't, it's hard for me to get short US dollar yen, and it's still looking okay to me. It's not a high conviction trade. I have more conviction about what I'm going to see in yields. So this is also going to be a very big test for charts like this to see if what Paul says today can generate a new low and negate what we saw last week. So far, it looks like we're just consolidating in the 30-year after a 20 bip pop. So I think we could see this 160 or so. One other thing I want to touch upon, of course, I never would have dreamed 34.75 in S&Ps, and even Greg last week, his target looked aggressive at 11,750 in NASDAQ, and here we are just blowing out. Even the dailies now have kind of blown out the divergence, and I think there was a nice chart of the day. Go check it out by Blake, or else it was a tweet I saw from Steve about a target that Blake has, and it was above 3,500 based upon a technical measurement there. So take a look at that, and look at all this energy that we've had in stock indexes, right? Look at all that energy. That's a lot of risk on energy over the past few months. And with all of that energy, look how long it took for WTI to finally take out the high from August 5th. All right. So 3 weeks of voracious risk on. So, the market message to me is, if crude didn't participate to the same degree as stock indexes and other risk assets, what's going to happen if someday or some decade we ever get a correction in risk? And now I think we're starting to set up some potential. You could see it pretty clearly. And Steve Volge had targets over 44, maybe 44 and a half for one more push up where crude could be a decent selling opportunity. And I think you could see it pretty clearly here on what's going on in the last trading day or so. What do we have here? We have drive 1 confirmed, drive 2 under 70, and I'd be looking for, I'm going to wait for some type of third drive pattern here that could take it up to, it looks like a little bit above 44 or so, and we'll begin to look to short it. Okay, and that the main market message is really it hasn't been that strong. In fact, one of the few sectors that hasn't really caught a bid in this unbelievable parabolic stock market rally is oil. The oil shares, big underperformers during this. So about a buck higher, I'm going to be looking for where the RSI is. And, of course, every time I draw one of these, I'm prepared that you could break through it and have throwovers, and on lows throw unders. But I think that there could be a decent top pick setting up here. Any questions on anything? It's kind of surprising. Gold put in a pretty good day yesterday. Again, chart of the day showed it holding right where it had to, and right now it just looks like a little flag. So I think it's going to be important if we get up here towards 1970, 1980 for gold, because what if we're just having another failing rally up here. And you would think, who would want to be short gold with this announcement that we're, the speech we're going to have by Jerome Powell today. So in here, I don't know what to do. In fact, gold has become more volatile, silver even more volatile. Silver reacting better. Look at the shape of silver holding above these levels, where gold has challenged them, taken them out, and trying to hold. So I really don't see anything bearish here. Perhaps if we take out this candle,
We have to take out those lows, Dale.
This is it, right?
That's it. I mean, I'll show you guys why, but that's
Go ahead, buddy. I mean, I'm wrapped anyway, but I saw your chart of the day, and yeah, yesterday looks like a very important candle either way.
Yeah, it really is, and that's going to really determine what I want to do in the currency market today, and it's going to confirm, if there's going to be a dollar reversal, it's going to show up in gold. So let's talk about today, because today is a really obviously very important day. People are chalking it up to the most important speech that Jerome Powell has delivered, as he talks about the framework of the Fed moving forward. And a lot of people are talking about, inflation averaging, but that's not a new concept, and it's not a new concept that they haven't discussed. But the troubles or the issues that the Fed chairman are going to have today is, how do you convey your inflation averaging, how you're going to do it, and convince investors that now I'm going to be able to usher in inflation when you haven't been able to do it for so many years. How do you do that, and do you really box yourself in to an economy where it could be much better a year from now as we get through this COVID issue? So I think that there's a little bit of room, in my opinion, for some disappointment today, because there is not one bank analyst that I've read, minus Citi, is kind of like everybody expects a very dovish Jerome Powell, but Citi is like, we expect him to be dovish, just not super dovish. But everybody else is expecting a very, very dovish Jerome Powell, and he's not going to talk up the economy, of course, but is he going to really box the Fed in and saying we're targeting 2.5% inflation and we're going to let it run hot for an extended period of time? I think the market is set up for a possible disappointment here. Now, what's going to trigger that for me is gold, and that's why I wanted to kind of interrupt you a little bit. Not
no problem, bro. But it's Blake, and I'm going to return the favor, and then I'm going to shut up. To me, it's not what he's going to say that's so significant and unusual. It's that he's using this platform. I can't remember in my career a Fed chairman making a major policy speech at Jackson Hole. Can you?
Well, Jackson Hole is notorious for shifts and changes, and yes, and actually,
from a Fed chairman, you've seen this before.
Yes, yeah.
Okay.
This is and has created a lot of volatility around Jackson Hole, and that's why because it really can set the precedence or change for different Fed governors. I want to say Bernanke used it as a good platform for shift. I want to say it was 6-7 years ago. I'd have to go back and
I knew you would know.
But yeah, I mean, there has been, and that's why Jackson Hole is such a big, momentous event. And this is going to be really unique as we're dealing with, obviously the pandemic, and we have equities at all-time highs, and obviously expectations are running high. I mean, you cannot look at the NASDAQ right now and say that expectations are not running high. I mean, we are past the 161% extension of the post-pandemic move. I mean, it's crazy. It's bananas. So, okay. So what I got to do, I've only got a few minutes. I'm going to get through these charts really quick, but like I said, gold's my tell. Oh, let me go ahead and just put that down. Gold, it's bullish while above 1900. But that is, and the reason why I put asterisks there is because I believe that that is the most important support level to watch today for currency traders. That would be you and me, right? All right, resistance is still 19. I think let me double check what we wrote down yesterday. 1960, 1955. I can't remember which number we wrote down, but I'll figure that out. Coming up. So yesterday, 1960, so we're taking into account that spike high, that's fine. So 1960, and let's go to the euro. I want to get all this analysis done for you guys, so you guys are all ready to go for this event. So the euro, as you guys know, we had the false breakout last week. Now that's had very limited follow through at this point. The market's been very adamant about buying euros below 117. Even the dip this morning, we got below 117. The market, people are excited to buy it. I still think that the euro key support is going to be at 117.10, but when we start breaking below 117.50, I'm going to get a little nervous about the dollar. Okay, so I will write again 117.10. Or I can just write 17. That's going to be important support today, 117.50 intraday. And resistance, we're still struggling on 118.50 and 119. If we get a spike up to 119, that's going to be a big deal. Okay, so 118.50 and then 119. What I'm hoping happens is we have to still be on the bullish. While we're above 117, we have to be bullish. What I'm hoping is that the Fed chairman comes off a little dovish, talks about inflation averaging, maybe even says, yield curve control, is still on the back burner, and negative rates might even be on the back burner, but they're still there. And then the market gets really bullish risk, and the euro spikes up, and then we get kind of like a blow off top type of deal, and then the euro fails at 117 or 119. That's what I'm kind of hoping today. I don't know if we're going to get that, but we'll see. All right, cable 130.50. Now you guys know 130 is like really, it's 129.70 actually, 129.80. I'll write that down. 129.80 and 130.50 support. I'm going to keep the cable in range because we are really struggling. 132.50. Remember, this is the weekly 618 retracement. See this move right here? Just keep in mind that is 132.50, guys. So if you sit here and wonder why we struggle up here, okay, it's because this is key. All right, Aussie near channel resistance highs. Okay, this is the channel. That means that 71.50 is important today. Obviously 70.75 is absolute key for bulls, but 71.50 is going to be support, channel support. I struggle with this one. We have to keep it bullish for now while we're above 70.75. Resistance, we could get a spike up to 73, channel resistance, okay? I think that's going to be fairly key up there. Kiwi's. So the Kiwi is holding well above the 65-cent level. And that, as you guys know, is still really key support. So The Kiwi got a little bit of recovery today. Or, sorry, last couple of days. But you guys know that the Kiwi at 64.90 is key. This resistance, let's see how important this is because I think it's fairly important. 78% retracement is 66.63. I mean, 67.10, so we can go to 66.65 roughly. 66.10. I think the Kiwi has been more range bound than anything, but you guys have to also note that we are above a multi-year trend line here while we're above 65 cents, plain and simple, right? Let's go to the Canadian, next one down. The dollar CAD is back at 161% extension, multi-year trend line pivot. We're sitting on it right here, right? So you guys know that this is really critical support. Okay. Resistance. Let's go to the channel so you guys can see it. Resistance. This is that big multi-month channel resistance. It comes in at, now it's 132.20, but I'm going to say this 38% retracement at 132.30 because it's hampered every rally thus far is key. Okay. So 132.30, and this is critical resistance. Now I'm going to keep it in range because it definitely, the Canadian has fared worse than other commodity currencies. If you look at the Aussie and the rally that we've seen in the Aussie over the last, several months, Kiwi, I mean, both the Kiwi and the Canadian really aren't faring all as well as you'd think they would be. So again, I'm going to keep that range. Dollar Swiss is easy. I say it's easy because remember that triangle we talked about yesterday? I mean, we are just pinging both sides of that triangle, the apex of the triangle right now. 91.20, 90.60. That's it, right? We are still bearish while we are below this 92.50, this up here, if you guys don't know it. While we're below 92.50, we are still bearish, but that doesn't mean we can't get a counter trend move. That doesn't mean we can't get a rip higher from 91.20 to 93, 92.50. Just be a counter trend move. That can happen. So remember, that's what the bias chart is really showing you guys, what the overall trend is, even if you trade against it, which is fine. Hold on. I'm seeing some cross markets, so that I'm just stopping for a second because I just want to make sure there's no news out. Because his speech could be released early at any time, so we have to be always on guard. Okay, dollar yen. Dollar yen's easy. You guys should know these numbers like the back of your hand. 106.50, 105.30. You guys heard, see me write down the same numbers every single day, right? 106 being support. Well, that was support yesterday. And we dropped to, 105.80. So that is going to be support going into today. Okay. Dollar index. Okay, you guys know false breakdown. We could be developing, just so you guys can see it, I'll just draw it for you really quick. Inverted head and shoulder pattern. In case the dollar does bounce, Okay, so that means that 93.50, obviously 94 is big. So for today,
Nice look.
93.50. Yeah, we'll see. I mean, it's all a setup, but we have to be
Yeah.
prepared for it. It is bearish.
I didn't see it till I saw it.
But when you're in a bearish trend, a head and shoulder pattern inverted is a trend reversal sign. It's not a lot of people try to look at it as a continuation pattern. It's not. It's a reversal pattern. Now, you guys know I'm not convinced about the dollar at all until we get above 94. So we'd have to get above 94 for me to be like, oh shoot, here goes the dollar. But we have to be on guard for a reversal because of the false breakdown last week and the heightened risk of a disappointment today, right? Okay, dollar Mexican peso. This is, guys, I'm gonna say right now, if stocks continue higher from here, let's say the S&P, goes to 3,500, the dollar Mexican peso should be breaking down. The emerging market currency should be stronger, but it's not, and that's the problem that I have with the dollar mex right now. I can't get my head around why the hell we're not trading at 21, a 21 handle, let alone a 20, maybe even a 20 handle. I can't fathom why we're not trading down here. We're not below this 200-day moving average. It should be breaking down. It's not, and that's the big risk right now for the dollar mex. All right, so you guys know that. Oops, shoot, I forgot this is easy, 92.50. You guys should know that. Dollar Mexican peso, 21.85. That's key. But if we break above 22.05 or 22.30, and that's gonna start squeezing some shorts. So just keep that in mind. U.S. dollar, Norwegian krona, 881, 905. And you know what? I'm gonna have to put it back in bearish, and let me show you why. Here's the U.S. dollar, Norwegian krona. We broke this trend line, got a little boost for just a day. The dollar slipped back, but here we are really, in all actuality, we're still holding this broken trend line. So we're trying to make a turn. We're trying to base. And that's the best way to look at the U.S. dollar, Norwegian krona. We're trying to base here. The 881 is still important support. Remember, that's 161% extension. 161% extension of this move. It's 881. That's why we stopped there, and we've known that for weeks. But we're still finding support ahead of that. We do have to get above 905 for this thing to turn, like even have a chance at turning bullish. But we are trying to build some sort of base here. And so I'm bearish. I'm range. I'm bearish. I'm range. I just don't know. I'm going to keep it bearish for the day. All right, S&P. Now, as I pointed out yesterday via Twitter, if you're following me via Twitter, look, we're all-time highs. Megaphone pattern. Remember, the S&P is full of stocks not following Netflix, Amazon, Microsoft higher, right? So this is the broader market. There are so many stocks right now that are just being dragged by we got data coming out. Sorry. Hey guys, we have data coming out right now.
I was going to give you the 30-second warning, but we're not there yet.
Not there yet? Okay, here's data.
Almost there. That's fine.
If you guys are Forex Analytics subscribers, you get this data flash included with Forex Analytics, or you can pay Bloomberg $2,800 a month like this and get the data releases here. Watch the GDP number. We have initial jobless claims right here.
Yeah.
We're looking for 1 million. Yeah, 1 million, huh?
It's been 1 million plus or minus 100,000 for a
crap.
Now.
Wait, hold on. I got to pull up charts. I'm sorry. Didn't mean. Let me pull everything back over. We'll just keep it on the euro is fine.
Spot on.
Initial
million.
jobless claims, exactly.
Look,
Yes.
they
Yeah.
came in faster on data flash than it hit Bloomberg. Now GDP hasn't come out yet.
Nope.
Continuous jobless claims.
There you go,
14.5
GDP.
million.
But this is annualized negative 37. It came in a little
31.
bit. Oh, 31. I'm sorry.
A little bit better, yeah.
A little bit better than expected. Okay. So that's not going to move the market at all. Bloomberg did come in a little quicker on that. But you can see how fast data flash is. And again, this is included with Forex Analytics. Sorry, guys. I just made
Close enough
everything.
for
just-
government work, and I'd rather not spend 2,800.
Yeah, I mean, you know, that's the thing is you know, with
What a value
it's a huge
with our
value.
subscription,
It is,
especially if you're real news sensitive in your trading. So
yeah, I
big
mean,
value.
look, I don't really for news. I care to have it timely. It doesn't have to be necessarily, you know, at that very second, but it's nice to have it. And I know a lot of news traders that would die to have, you know, this
Free.
you know, data flash out, yeah, included for whatever.
Who
you know,
else does something like that?
No, our
no one.
premium service is $120 a month. You know,
Wow.
and you don't even have to have premium service to have that. You have the light version for $20 a month, and you still get this included. So, anyway, yeah,
Great
that's
job
that.
on this website, guys.
That's Steve. I didn't do anything.
Well, I know.
Yeah.
I didn't want to say it.
But
so.
Steve did. Steve has done a lot. All right. Let me finish it up here with the S&P. So we were talking about the SPOOs, and again, I'm going to reiterate I was just talking about it. The megaphone resistance is up here, and I think it's possible that we test 3550. That's only 70 S&P points away from where we're at. I'm hoping we get there today. That'd be nice. You know, Powell's dovish. Everybody goes, "Ooh, he's dovish," you know, and stocks cream higher to 3550. And then, you know, everybody goes, "Oh, the air is really thin up here." And then, you know, we get a little bit of a reversal. That'd be nice. But really, that's my next resistance for the S&P. And, you know, it's 3550 roughly, you know. Because you got to, it depends how you draw this. You know, could be 3530, could be, you know, a little bit lower. Anyway, support though is at 3400, and frankly, you know, I'll write down 3450, but really 3400 is the big kahuna. For some reason, we see below 3400 today. You know, that means the dollar is exploding probably, but I'm just gonna write it all down because we need to have it. Remember, it is summer, guys, and liquidity is fairly poor. So exaggerated moves on a day like today, with Powell probably giving the most important speech of his life, of his career, on a very illiquid day at a Jackson Hole, which should be a, you know, everybody's running around shaking hands and, you know, touching each other's butts. But no, it's all going to be virtual today. So this is going to be a really, really big event. I said butts. Yes, I said but. I could have said other things, but I said butts. You know,
the S&Ps are in a range, a mountain range. Like,
all right, that's it. I'm gonna leave it to Stelios and Steve and Dale. I'm done.
All right, man.
Hey, just remember, guys. One last thing. I need to mention this before we go. If you guys are not Forex Analytics subscribers and you're not part of our community, make sure you visit Forest Park FX. They are a webinar sponsor. If you live in the United States or Canada, you can get a cashback rebate. And as a retail trader, I don't know why you didn't. I trade through JP Morgan through an institutional platform. So I wish I got rebates. Oh my God, I'd be crazy. Anyway, but hey, you guys are, you know, can do that. But what's really cool is if you're outside the US or Canada and you want to try to get Forex Analytics for free, you know, you can open a Pepperstone trading account. Pepperstone is one of the largest FX brokers in the world. and if you open a live trading account and do some trades with them, you can possibly get Forex Analytics for free for a period of time. So,
Blake, they actually need to do it using that link.
yes, you got to use this
Yeah.
link, because we actually have to activate you too. So you got to click this link here. Whoops, not that link. Sorry, wrong link. You got to click the link right. Where is it? If you're a trader, where is the Pepperstone link, Steve?
Lower, mate.
There we go.
Yeah.
So you got to click that open an account link, that one right there. And then make sure because it's a two-step process. We have to, once you open your account, we actually have to authorize you. It just doesn't automatically happen. It's for accountability reasons. So, we actually flag your account and you get it free, blah, blah, blah. But anyway, all right, guys, I'm going to pass it over to you, Steve Stelios, coach. And guys, good luck. I will see the rest of you guys in the chat room, through this whole event. And I'll see the Forex Analytics traders. I'll see you on the daily roundup in about 4 hours time. All right, guys, have a good one.
Good luck
Thank you,
today,
mate.
bro.
Thanks,
Thank
guys.
you,
Good luck today.
Blake. Thank you, guys.
Hey guys, I was going to say the S&P is in a range, the same range that Mount Everest is in. A mountain range.
Yeah. So, Jackson Hole. It's not somebody's hole. Yes, so this is highly anticipated. And frankly, let's take a step back and see what the markets are thinking and pricing in. Exactly what Blake said. Pretty much every analyst, everybody thinks it's going to be a dovish speech, and more of the same, potentially yield curve control, whatever. The main thing is it's going to be dovish, and everybody believes it is going to be dovish. So theoretically, risk reward is to be on the other side. Problem is, with things so stretched for so long, the profit has been to be long risk and long equities, but it's this feeling of picking up pennies in front of the steamroller. So I hate doing that. So, if somebody put a gun to my head, said to take a position, I would be shorting ahead of it. But again, shorts have been burned for quite some time now. So it's a very tricky situation. I rather react to the reaction, just like Coach says, very rightly so. And, we just have to wait to see what Chairman Powell says. Now, what else is happening overnight? Well, the other thing we need to mention again, and could have an effect on markets, is Hurricane Laura, which is increasing. It's doing, I think, 150 miles per hour now. So that's pretty substantial hurricane. And the main issue is
How bullish is that?
Bullish. Will oil production and the refineries, how will they be affected and for how long? And oil seems to be supported by this, and we're above $43 in WTI, and there is this fear of what's going to happen with Hurricane Laura. Obviously, it's going to come and go, and we're going to go back to normal eventually. But you know how oil is, and how it affects everything. Production and the limited supply, when it does get limited, it does have immediate effects. So you have to be, even if they're short term, you have to be wary about that. Otherwise, data-wise, it's been very quiet. We saw the US data together, nothing really to write home about. Swiss GDP, slightly better than expected, but really, who cares? That's the market's main reaction.
Investors
has been, yep. So, yeah. Otherwise, it's been another quiet morning, and really all eyes on Powell, and see what he says. So, unfortunately, I wish there was more to say, but it's been this whole week. has been, overnight, same pattern. So equity is a little bit lower, metals getting sold a little bit, and then during the day, Europe and then the US specifically, more so, they just ramp up everything and move to the next day and
Rinse and repeat.
Exactly. So
Yeah.
let's see what happens. Obviously Jackson's Hole
Groundhog Day, Stelio.
yeah, exactly. So obviously Jackson Hole is going to be a big event. So there is a chance that things are going to be moving, but remains to be seen. So that's it for me. I mean, I wish I had more to say, but I don't. Our friend Saad
now
says
the only one that needs to say something is
the hurricane is showing a bullish pattern. Yeah, I agree.
Yeah, I mean, to be honest, this is part of the madness, and that preceded the economic madness that followed the COVID catastrophe to the economy. You remember the whole Keynesian logic, which is completely derailed, that whenever you have some type of a hurricane or anything that actually does damage, serious damage to infrastructure, that's bullish, because we now need to actually rebuild, fix the damages, restore whatever has been has been vanished, or whatever, and which of course is lunacy, right? Because you're spending new resources to just restore what was already there. So that's completely unproductive for an economy.
I think the question for an economist who supports this view is, okay, so if there's a hurricane, you need to rebuild, that's bullish. If there's a total nuclear destruction of the whole earth, that's bearish. Where is the line? Where do we cross from bullish to bearish?
It's exactly the same fallacy that you can easily catch people doing when you're talking about the minimum wage. The minimum wage is a good thing. Okay, how much is a good thing? Because if it's either a good thing or it isn't. You know what I mean?
Yeah, if it's a good thing, put it to 100,000.
Yeah, if it's a good thing to be 15, why not $20 per hour? Why not 25? Why not 40? Why not 50? Where is exactly the line that turns it from a good thing to a bad thing? And if that's the case, how do you prove that the line is there? I mean, what is the equation? What is the mathematical approach that brings the conclusion that it's a good thing under X, a bad thing over X?
Yeah. It's a fallacy, like you said. So anyway.
Okay. So let's see. Let me start from the very, very basic, which is Blake already mentioned the significance of gold, and I'm gonna show exactly what I'm saying, because I also agree 100% with him. I think that gold is at a very, very key juncture as we speak. But before I do that, let's first have another look at the DXY. So the DXY is still trapped in this range, 92.50 to 94. As we've said, this can be interpreted as a false breakdown, that we saw the move below 92.50 lasted roughly a day. How do we know that this is going to be a false breakdown? If we do see a move above 94, right? So you want to be bullish, dollars in general, as weighted by the DXY, you should do so only above 94 if you're asking me. Now, why gold is at a crucial juncture? First of all, we do have this ascending trend line support, which is significant, and I mean, it has been acting as support since the March low, but we also have this trend line resistance. So in essence, we're now trapped in this symmetrical triangle, and the range has really been reduced to, what is it, $50. And we know that nowadays gold can move $50 in either direction extremely easily. So I do think that we're about to find out what's happening here. Are we on our way to a deeper corrective move before we can move higher? Or perhaps this was it. I mean, we've been in a corrective move since, what is it, like the 10th of August. So it's like 2 weeks. Is this enough? We'll find out, I guess, today. I do think that, whatever breakout we see, uh, on a daily close basis, because keep in mind that very frequently, whenever the whole market is just waiting for a major announcement or a major speech in this case, that the market considers that it might be game changer, you might have spikes in either direction or in both directions before before the market actually settles in how it wants to interpret the new information. So that doesn't mean that if you see a spike above 1950 or a spike below 1900, that's necessarily the case. The daily close is going to tell us what we need to know, because the
Excellent
market
advice.
the market will have had enough time to digest and decide on a direction by the end of the day, most likely. So I'm all for expecting continuation after this move, but I don't think you should immediately jump on it because you just see like a move unfolding within a few seconds or a minute or two. I think that you might find yourself being in the wrong side of the market and not know how to bail out from it.
Steve,
Um,
that break we had in gold a couple weeks ago coincided with a blip up in yields,
mhm,
and both yields and gold are in indecision patterns after that move. It's like
mhm,
everything's in an indecision pattern, but
mhm.
see how we had that pop up and all we've done is move sideways. So if yields are heading up, that should be the catalyst, I think, for continued correction in the gold. If we fail from here again, then I think you get your breakout to the upside. I think
Yeah.
everything's about yields.
Yes, although yes, absolutely, it is quite important, but people should keep in mind that when we're talking about gold's correlation to yields, it's irrelevant to look at what the 10-year yield is doing, because you only need to look at what the real yields are doing. You can do that through tips, for example, treasury,
Yeah,
inflation
oh,
protected
that's a great
securities.
point.
Yeah, so you might on occasion have yields moving higher, but inflation expectations moving,
Even
you know,
higher.
even higher.
Yeah.
And although just by looking at the 10-year yield or the 20 or the 30 doesn't really matter that much in what I'm saying, and thinking, oh, it's moving higher, gold should definitely move lower. Then see gold moving higher or not doing anything because you're not taking into account inflation expectations.
Yeah, we're
And
behind the curve when that's happening.
yes, and this is particularly important today, because specifically today, what the market is pricing in and expecting to hear from Powell, they don't know the extent or the variation of what we're going to get, is some type of an inflation targeting from the side of the Fed. So specifically today, we might have the market need to reprice inflation expectations quite violently. So people should have that in mind before making decisions just based on what the 10-year yield is doing.
Good advice.
Now, just to stay on the 10-year yield though, since we opened this, yeah, we did have this move higher, and we do seem to be having, a little bit of a consolidation. So, just from a technical perspective, I wouldn't be surprised to see another leg higher in yields. So I wouldn't be surprised to see, a move towards like this area of resistance. What is it, like 94 basis points? Yeah, we might actually get that. And here's the 30-year yield, which is still trapped. Actually, it's in the middle of the symmetrical triangle. So I don't think that it's easy for us to get
You ever
some type
see
of.
lows made with a symmetrical triangle?
No,
Usually it's an
no,
ascending triangle.
yeah, it is a very rare thing to
That,
see.
that's what I
Triangles are
thought.
very rarely reversal formations. Sometimes if
And
they last,
ascendings are.
yeah, sometimes if they last for a very long time, they just can look like triangles but be bottoming formations. So that can on occasion be the case. But in general, these charts don't really give me much confidence that we're moving higher in yields. But as I said before, for all intents and purposes, and not only just to judge, what is the fair value of gold, I think especially with what's happening, during the last few months, we should pay more attention to what real yields are doing, which are, seriously negative, than nominal yields. Not to go into the whole conversation that inflation measurement is, definitely skewed severely to underestimate inflation. We've had this conversation multiple times. We don't need to go into it, but even taking into account, what the governments measure, real rates are seriously negative. Having to do with indices. Now, potentially, and I say potentially because this market has gone lunatic. I mean, I've been following many potential formations, but the market just isn't stopping. If we are to see a reversal, this might be a nice ascending wedge we should pay attention to. They can often produce overthrows, but in order for you to even consider the possibility of a reversal, you should at least see a nice reversal candle today. Otherwise, there's nothing to talk about. And from a technical perspective, unless we see a move below like 33.95, there is no real technical evidence that something is happening. But another thing to watch here is the Nasdaq, because the Nasdaq at the same time is also at a trend line resistance. In this case, not an ascending wedge, but actually an ascending channel. Now, I was speaking with Stelios and Blake yesterday, and we were talking about the indices, outside of the webinar I'm in. And, I don't know how many have realized that the Nasdaq has actually increased 12-fold in more or less as many years, actually less. From 2009, it's almost a 12-fold increase from 1,000 to 12,000. What's more interesting in that is, and it's better to look at it on the weekly chart, here it is. What's more interesting than that is that a market that has been in such a tear for 11 years, you would expect that there's going to be some momentum loss. But in this case, we've had the exact opposite thing. I mean, we've been experiencing, since we bottomed out, the by far more vertical period we've had in these 11 years. Just look at the weekly chart and look at this latest period that started when we bottomed out and end of March, April, beginning of April, whatever it was, until today. Add to that we're currently almost 81% higher from the lows. But even if we want to completely ignore the lows, let's assume that this was a perfect year and COVID never, ever even knocked on our door. We are 37% up year to date from where we opened 2020. 37% higher would have been a spectacular year in an amazing bull market during an amazing period for the economy. And yet, here we are in the year that has produced the biggest black swan during the past 30 years, at least, what has to do with its effect to the economy. So, you go ahead and, decide what you want to do. But, if you want to be long, and if you believe this momentum can continue, which you never know, it can, just keep in mind that, if you want to find some type of a fundamental thesis to support your, bullish positions, there is none. It's just, momentum chasing and hoping that it's not going to reverse in your face. So, that's my advice on that. Let me see what else. I don't want to cover the major currencies because Blake already did so, and I really don't have to add something to his analysis. Anyhow, we haven't had any real movement in them during the past, several days. We've been more or less oscillating in ranges. Euro USD is a great example. Even the pound, that is a little bit more bullish, hasn't broken out to new highs for some time. I am carefully monitoring, though, this 132.50 area. I mean, it's a confluence of resistances, and I do think that the cable wants to move higher. And speaking of which, one pair that we haven't had a look in for some time is Euro Pound, and Euro Pound does look vulnerable here. So that's something I forgot to mention yesterday, but given the opportunity, I want to mention it. So Euro Pound began by breaking through this ascending channel, which led this recovery starting in April. Didn't produce any real follow through, which made this breakdown look suspicious. Then I was monitoring the symmetrical triangle. We seem to be trying to break down from it as we speak. 89.20 is a confluence of supports. I think that if we slice through it, there is a chance that actually the Euro Pound is going to accelerate to the downside. In any case, I do think that the risk reward doesn't look very healthy to be long anymore from where we currently are, especially if we break through 89.20. I think that the risk reward is going to be quite favorable for short positions, and that says enough, having to do with potential overperformance or underperformance. If you want to be choosing a pair, either Euro USD or the cable, to be short or long, I think you should definitely keep a good eye on what the Euro Pound is doing, because as I said, it looks to me like it's likely it wants to reverse lower. Let me see, platinum, gold, silver, palladium. Yeah, gold we already covered at a key juncture as we speak. Silver isn't going to do anything much different. Similar type of a consolidation here. Also like testing this trend line resistance. If gold breaks higher today, silver is going to follow, and both of them are going to show that they want to move to new highs before producing a deeper correction. They will have produced once again a rather sharp but very short-lived correction, which is quite a typical type of correction you see in very strong bull markets, right? So that won't be that much of a surprise. Platinum, I spoke about the significance of this channel both yesterday and the day before. It's holding, so that's important to consider as long as it is, and especially as long as we stay above 875. There's absolutely no reason why somebody would want to be bearish platinum. Personally, I don't want to. In any case, and palladium remains trapped in this large symmetrical triangle. So we've been consolidating in this large symmetrical triangle for some time. We've developed another symmetrical triangle within the symmetrical triangle. So I think that the breakout from this formation is very, very likely to produce quite a violent move in any direction, whichever we break through. Keep in mind the Fed is the biggest buyer of the tips. DJ says, yes, that is a very valid point, my friend. CAD Q2 current account better than expected, had no effect to the market, says Jay. Yeah, because the market has, at some point in the past, things like deficits, current accounts were extremely, extremely important for the FX markets. I mean, everybody was waiting for them, and they were really market movers. And if you ask me, for very, very sound economic reasons. I mean, that's how it should be. Until we went to the era of La La Land and monetary lunacy, and the market has stopped paying attention to all that and completely ignoring them until that trend reverses, because I'm pretty sure that at some point, definitely in my lifetime, we're going to go back to really paying attention to these type of numbers. Any insight on Dow? And the situation with Dow is more or less the same. The big difference with Dow, as I interrupted yesterday, Blake, and I mentioned at some point, is the problem with the Dow problem, quote unquote problem. It's not an actual problem. It's that it doesn't have so many tech stocks, right? And that's why you see this type of underperformance. And especially since,
And that's why they're changing the Dow composition.
Yes, an extra reason why they're changing the Dow composition, Dale, right?
Yeah.
Many people don't know that, but the Dow is not a capitalization weighted index. How is it weighted? Price. So now that Apple is splitting its stock, Apple's effect on the Dow will significantly diminish. So the Dow is going to have an extra headwind that Apple's performance is going to improve the index less. So keep that in mind. Okay, who do we have today?
Julia Cordova.
Okay, nice.
Julia's great, and she's one of the most creative technicians I've ever seen. Her YouTube channel is exploding. And Julia, it's a pleasure to have you return here. I'm going to get you set up. Thank you, Steve.
Thank you, Dave.
Great review. Like every day I could count on. If I don't know what's going on, all I have to do is listen to Steve Volge for a while. And the ideas flow every day. So welcome back, Julia. How are you today?
There she is. Yeah.
Waiting to hear your voice.
Hello, can you hear me?
Here we go. That's it. There's that voice. How are you?
I'm well, thank you. How are you?
I'm doing okay. It's really great to have you back. And, I've noticed your YouTube channel. I don't even know. Maybe you had started it last time we talked, but it's growing like a mushroom. Congratulations.
Thank you. It's like a good kind of fungus, I think.
Yeah. Yeah. So have you used Zoom before?
I have, yes.
Okay. So why don't you share your screen and we could talk about things. And what I love about your work is that it's completely you. A lot of the things that you say and your annotations on your charts are, not just good work, but interesting. And you also make what you do pretty entertaining, Julia. Don't you think that's a pretty good combination of being compelling and entertaining at the same time?
You know what? Like, it makes me super happy. Actually, excuse me one second. It's noisy.
You have a lot of fans here today.
I had the fan on because it's hot in my office without it because of the computer.
Okay. Yeah, I turned mine off too. Okay. I guess there's a heat wave across the U.S. So,
yeah.
How have you been handling this action? With COVID and this massive recovery. I think from what I saw on one of your videos, you were pretty bullish in NASDAQ for this move.
I was at the beginning. Yeah, I was bullish. I mean, I'm super lucky because I happened to catch the entire way down with TVIX. And then, I got out like maybe, I know. I got out maybe 2 or 3, it turned around. But then I also am super lucky because I happened to catch the bottom. But about a month ago or so, I flipped from being uber bullish. I mean, people were pointing out Head and Shoulders. I'm like, that's not a Head and Shoulders. And I'd look at them like, it is, but it isn't. It's not, Yeah. Anyway, about a month ago, I flipped to being neutral with my bear antennas out because it was, for me, in order for it was
already crazy.
Yeah, well, yeah. But also, in order for it to have kept on going with momentum, I very bullishly actually wanted a pullback so that it would have some time to recharge before it got to all-time highs. Because I thought that in a situation like this, if it were to have continued, and it did, then it might, good for people who have held on. But my thesis is that the more it continues without having had a healthy pullback, the worse it is after. I don't want to say after, but the worse it might be later on, the bigger the correction, in other words. And I think that's really scary for people. And I don't know about the market's ability, if it does get a correction over, like if the NASDAQ does correct over 10%, I do not know about its ability to flash back from that the way it has. So that's what my concern was.
Yeah, so going parabolic, I've noticed, and there are traders that could sit through these types of moves, but normally I think you either have to be naive about a continuation, and traders just are too skeptical because they've seen things, they have been wounded and they remember being wounded by things like this, or just so greedy that you just want more, you want more. So to be there for the completion of a parabolic move, I think is the exception, not the rule. So you're worried about this parabolic move. Are you taking into consideration this is a pretty big day at Jackson Hole with the Fed chairman's speech? I know you're a technician, but do you have any thoughts about what the Fed is going to say today?
You know what? I was listening to Blake earlier, and I very much respect people who listen and watch the news and stuff. But I gotta say, I mean, even if I had a copy of the speech, yes, studied it, and I tried to figure out whether or not it was bullish or bearish or dovish or whatever, dovish or hawkish. I got to tell you, I don't think I'd be able to do it. I think that the hindsight of people who are picking apart words afterwards to justify price movement is astonishing. And I just personally think it's going to move however it's going to move, and there will be all sorts of backwards justification to figure out why. That's just, and that's, I mean, what do I know? I don't know anything. I don't know. I mean, I'm like, Jackson Hole is where you ski. I don't know. I don't know anything.
Do you kind of lean towards flattening out your book prior to red events like this Fed speech or a Fed meeting or the NFP, or do you just ignore that too?
I just ignore it all. I mean, I know what's happening, and I win stops, and I really try to figure out if I were long, where I would stop out, if I were short, where I would stop out, and then I set orders ahead of time. So because wherever I would stop out is where I should buy or sell. You know what I mean? Like I have a superpower, and that is being able to pick the tops and bottoms based on when I would tapped out. So that's usually what I do.
All right. So what are you seeing here in gold? We've had this little pullback, a little rise in yields. It was a tremendous run, only eclipsed by NASDAQ. Is your view that I see a 1723 number there? Would that be your target for correction of this bull market, and you would back up the truck down there?
Yeah, I actually would if it got down there. But I mean, really, it's not doing anything. It's really, I mean, okay, yes, it is. Intraday, if you're scalping or, if you're just scalping futures or something, that's great. But it's not doing anything. It's just flagging. And I think it's a long way from bearish. It just barely touched the 9 weekly. This is the weekly chart. It just barely touched the 9 weekly this week. Like, I mean, and that's such an easy thing for traders, is just to catch this, anytime MA after a long time of not hitting it. It's just a really easy trade. But I'm not really watching gold that closely right now because it's boring and everybody's talking about it. And I actually switched my precious metals over to silver, and silver's
more action there. But before we move on, Julia, can you give me an idea of how you came up with these pink lines? In a way, it kind of looks like a Andrew's pitchfork with maybe an extra line. People ask me, Dale, how do you draw trend lines? And I say, with my imagination. So
Yeah.
I'm interested is this just, feel and things that you see that, aren't standard to come up with these trend lines?
Yeah, I will tell you. So I actually talked about this. Well, no, I will, because I'm not
All right.
I'm not holding anything back. I want people to be successful, and if people can adopt some or whatever I do and be successful, I'm happy. But I talked about this a little bit on my YouTube. I'll show you. So I went back. Let's see, my screen gets redrawn. I went back to this original, 2008 into 2008, this original bull run. And I just sort of said, you know what, this looks like a good line. Like, I mean, of course it went parabolic and
Right.
but then it bounced here. And then, I thought it back tested here. I thought this looks like a great line. And so anytime I look at a chart and I see a great line, my own personal opinion, or I don't know, the whatever I figured out was that if I see a good line, the algos see the same line, and the algos will respect the slope of that line. So then what I'll do is I'll take that line and I'll move it around the chart, and I'll is this line generally respected at different?
So
Yeah,
as long as it's parallel to the good line you found, you move it around looking for other parallel
Yes.
channels with it.
Right, exactly. So I find a good
that is
line.
creative. See, no, you don't learn that, and that's why I said that in the promo about you, is that you use creativity. There's nothing that I really think you would learn in a lot of books about technical analysis to implement a technique like that. So cool.
Oh,
Yeah, this
I
is a
didn't know that.
Cordovian
Wow.
technique. Well, probably there is someone, Solomon said there's nothing new under the sun, but
No.
I've done quite a few interviews, and this is a unique explanation for finding speed lines, trend lines, whatever you want to label them. So pretty cool, Julia.
Well, thank you, Dale. It works for me. And then I think the magic, and try to find a few slopes that work, but the magic sauce is figuring out then if you have so many lines, which are important. And so, you know what I mean? Because you could also make the argument that if you filled your screen with lines, wow, look how it goes from one to the other. You know what I mean? So I try not to take myself too seriously that way, but I also just try to figure out which ones are important. So
okay,
I took that line, and I went to the very and
important low.
Yeah, exactly. And so I mean, this trough in particular, and that's why I've marked it, but I don't know that gold would get back there. I do expect a pullback, but who knows? And mostly because everybody's talking about it and it's boring me. So I feel like it's either going to go to the moon immediately, or it's going to get a really nice pullback. And then I'll have to look and see how the gold bulls are at that time to see whether or not it'll get bought. Because I look for sentiment also.
Okay, so what's really on your radar that's not boring you going into today's action?
Okay.
Anything?
So
go ahead.
What's not boring me? I'm not meaning to be negative. It's not boring.
It's just you don't see anything to do. I mean, maybe that's what you're trying to say. It's a no trade. So if it's a no trade, or it's an I don't know, why pay attention to it until you do?
Right. And you know what? That's only true also because I'm looking at the weekly time frames here. As I'm looking at these as a swing trader. If I had my 1 hour, my 4 hour charts up, I'd be like, "What are you talking about, Cordova?" You know what I mean? So
yes,
exactly, right? Because I remember last time we were talking about gold, and we were talking about on the 4 hour time frame, and we were like, and it wasn't, we were just like, and look at So I guess
is this where you start? Is this where you start at the weekly and then you drill down for entries and exits? The weekly and then drill down.
Yeah.
How far do you drill down?
I
15
go
minute?
down to 15 minute. Yeah, I go down to the 15 minute, but I usually trigger off of hourlies. So
Okay.
I mean, and then I'll just look at the 15-minute to make myself either feel better or worse, and then still take the hourly. But I
Okay.
start at the weekly because I mean, it's hard to not have any kind of drawdown, right? Like that's
Yeah.
difficult. I don't know, but yeah. So I look at the weeklies in order to figure out if I do have a drawdown, how confident am I that I'm trading with the trend or against the trend, just in case.
Yeah.
But yeah. So I look at the weeklies just to kind of know where I'm at, and then I drill down. But what I'm watching is so yesterday I had sort of just said, and I don't know this, but I'm watching the small caps RTY and IWM and to see whether or
Right.
not, and yesterday I had said basically these kinds of head and shoulders that have like an upward sloping neckline, they aren't my favorite. They're not really reliable, but I wanted RTY to close below this 157 area. And then I thought if it closes there, it might have a cascading effect. So, look at what it did. So it not only didn't close below there, that's that 157 area,
Right.
but now it's like zooming up. So I was just watching that yesterday. And so he must be saying something good for the market looking at that.
Yeah, maybe that's going on right now. So I could ask our
Yeah.
attendees, is Paul speaking because we're getting a pop in equities? Well, your eyeball as far as what you're seeing, the relative weakness has been Russell. So,
Yeah.
we'll see what happens there. I mean, the S&Ps are so parabolic, and NASDAQ, an amazing move. Steve was going over it today. I mean, if you just forget COVID, we're still up 34%. And yeah, so silver might be popping on this too. I'm wondering what you're thinking about the dollar. You doing much in FX? It's been pretty dead there. I'm wondering if you're a dollar bear or bull, or
yeah, no, I don't watch it too. I mean, I watch other people watching it, but I don't
Okay.
actually trade it. And yeah.
Crude has
I
been
just
pretty boring, Julia. I mean, WTI's
super
been,
boring.
yeah, but maybe it's setting up for something. We finally made a new high for the move with all this exuberance, risk on, and normally crude goes with the market, and it hasn't. It's taken all of this optimism in risk for it to finally make a new recovery high this week. Any view on WTI? Maybe a
Um,
short setting up?
well, on my YouTube channel, I said that if it got above 42.16, which is a sort of a weekly pivot I had, if it closed above that, which it did last week, it did barely. It closed like 42.30 something, I think.
Okay.
But I said that was bullish, and so far this week that's been accurate. But yeah, I don't really have any.
How about yields? Do you follow like notes and bonds? Because yields are part of the valuation formula. And last week or the week before, 10-year was at 50 bips, and it's kind of creeping up a little bit here. In fact, instead of me trying to guess what you're following, why don't you just tell me after the Russell? And I don't know if you have a position or not, but it is a weak sister. Maybe it's still a short. Anything else that you're watching? Are you doing individual issues in the stock market, or just the indices?
I also trade equities. I don't usually share them on Twitter because I don't want to pump things or dump things. You know what I mean? Like,
Okay.
But I do also trade.
Okay.
I do also trade some stocks.
Who's Eric?
Eric is Eric Trump.
Oh.
And yeah, no,
okay.
I did this thing because Eric went all in here. He tweeted that, basically bet on America. I'm all in. And then what I was doing, and this is the hourly range. of
Okay.
what he tweeted. I didn't know
How
exactly what
interesting.
time he tweeted, but this
Yeah.
yellow area is the hourly range. And then a couple of days ago, I was like, you know what? I should do a measured Eric move because he was correct. And then he was
Yeah.
not correct. And I wouldn't even tease him because everybody has wrong calls. Like that's just
Yeah.
part of the game, right? Like who
Yeah.
cares? Like if you're ballsy enough to make a call and not just say, like if this, then that. Like if you're
Yeah.
ballsy enough to have an opinion and make a call, then whatever. But he deleted the tweet bottom.
Yeah.
Like
I
yeah.
guess, you know what the two most difficult things to say as a trader, I don't have trouble with it, but I was wrong, or
Yeah.
I don't know. People's egos will not let them say that. I was wrong. Say it 3 times. It's cathartic. I don't know. People go, oh, if you say I don't know, that means I'm ignorant. I'm stupid. When it's really wisdom to know when you don't know, to force the issue and trade something when you don't have conviction about the trade.
Yeah.
What do you think?
Well, I agree with that. And I don't have a problem saying I don't know because so many times when I do know, I'll say it and then I'll like everyone else in the universe, I'll talk about how right I was. But I also don't have a problem talking about how wrong I was. It is just though human nature to get reminded of how wrong you are much more from other people.
Right.
Reminded of how right you were about things. Like, I mean, you've
noticed that.
Yeah. Well, like I literally on 323, I said, you know what? It looks good for a bounce. I didn't know the bounce was going to be like some crackhead on a pogo stick. I had no idea, but I just knew that it looked good for a bounce that day. You know what I mean? So I often retweet myself on that because I was like, because I also told my friends not to buy this day. They were calling me and everybody's like, you're crazy. You're an idiot. And I was like, yeah, no, I'm not. I'm smart. And, even if I'm wrong, I knew it was bearish.
Do you promise to get back to us when Eric tweets that he's now long on margin?
Yeah, right. Well, he did basically. So he did basically here.
Right.
So that's what I did. 2 days ago, I did the measured move from the bottom of the hourly that he tweeted for the top of the hourly he tweeted. And then I just did that measured move from when he tweeted back to life. I did the top of his channel and I did the bottom of his channel. We tested the bottom of the channel yesterday. See, I don't publish this stuff because it's like freaking kooky and I'm not like that kooky, a little bit, but not that much. But anyway, so I was trying to figure out where the tippity top would be if I measured move here. So I was like, looks like it's about 35, 35, 65 or so. I don't know. And there happens to be a line there. I don't know.
Yeah.
So
who knows? Only God knows. And we only know when we look back through our rearview mirror anyway. You could have, there have been plenty of A tops, but zero the top. So, and people don't realize, like even last week, I traded the S&P successfully from the short side. And it was giving 20 handle breaks, 40 handle breaks. I thought that meant maybe we're getting a change in the nature of the market until it just started blowing out again later in the week on Friday. So for me, this is an IDK. I don't know. Anything you want to wrap it with, Julia? I mean, it's fun talking to you.
Thank you. It's fun talking to you too. No, I mean, I don't know. I actually, I'm mostly long commodities right now, as opposed to, as opposed
grains?
to the market. No, I'm my investment portfolio is natural gas, silver, and coffee, and so that I flipped there a while back, and then I'm really lucky because 2 of the 3 went parabolic. So I'm giving myself some leeway when I have been trying to short the NASDAQ like a freak magician. Like I have been trying so hard and it's not working out for me. I don't mind telling you because it is. But I was giving myself some leeway. And I personally think that any kind of pullback probably won't have a technician going, well, it was the Fibonacci extension of the thing. I feel like any kind of pullback because of this parabolic move will either happen with, I just feel like it'll happen with absolutely no freaking warning. Nobody seems to be interested in hearing anything
Yeah.
about stocks going down, and people are mean. And even I don't understand if bulls are still in the market and they're making a lot of money. I don't understand why they're so angry if somebody says they're shorting it.
America's angry, Julia.
We're all
Everyone.
angry, Dale. Anyway,
Everyone.
so that's
Yeah.
I want to wrap it by saying don't be angry, just be happy and just focus on your own success, and then you'll
Okay.
be more successful.
So
later
how
on.
do you handle the isolation of COVID?
I have everything. I mean, as traders, weren't we isolated before? I feel
Yeah,
like I
we
was
were.
isolated.
You're right. We had
Yeah.
training. Okay.
Yeah. Yeah.
All
So
right.
it hasn't been that hard. I mean, I'm like, I want to whine with everybody else. I want to be like, why can't I go listen to music? Why can't I,
Yeah.
I want to I want to go, I can still do these things, but my mom is older,
Yeah. That's
not
a
in
tough
great health.
part.
Yeah, exactly.
So,
And so
that's the end, it's our humanity to be able to give someone a hug, a kiss, shake someone's hand. And that's what I'm having the most difficulty with, because now every time I think about it, there's fear involved. And, to me, that's a rough part of COVID is the separation from people where we're, communicating virtually and from a distance and with masks on, especially since I had, 50 grand worth of dental work done with implants. And now I have to wear a mask. They can't, my timing was off on that. So I could have used a mask a few years ago and now I don't need one, but I have to wear one. So, I encourage people to follow Julia. And one of the reasons is she's not afraid to say she's wrong. That trend line technique that she showed, you're going to learn some things that you won't find in a book from her. And
that's true.
And you know what? You're part of. And you're part of. If I listen to you every day, you've got me to laugh a few times. So her philosophy, she's passing on to try and not be angry and try and just be happy. Today's all we have. And I really appreciate you coming on, my Trading Warrior sister, and hanging out with me on the end of the dog days of summer.
Thank you for having me, Dale. I really appreciate it. And let's all learn to smile with our eyes now, because that's the only thing you can.
Yeah.
Let's
right.
smile. Yeah.
All right. Well, maybe we could get back together after the election and sometime in November and see how things are shaping up. And I kind of agree with you that once we get the first break from this parabolic move, that it may not be a dip to buy. Because
we'll have to see how deep it is. That's my thing. Like, if it's a smaller dip and then it goes back up, I will acquiesce. Wrong. If it was a bigger dip, then
yeah. And I like your ideas about commodities. Take a look at the grain complex. I don't have any positions there, but it looks like they're really firming up. And you know what? You can't eat gold.
That's true.
All right.
That's true. Thank you so
everyone.
Much,
all right. Keith is saying thank you. Everyone's saying thank you. You could follow Julia at Cordova Trades on Twitter, and there'll be a link on her Twitter to go to her YouTube page and
right here.
Include her in your intelligence gathering.
Thank you, everybody.
All right, thank you very much, Julia. I hope pips rain down on you for the rest of the year, and we'll get back together in the fall.
Thank you.
All righty. All right, that's a wrap for me and everyone. Good hunting, everyone. Remember, don't just count your pips, count your blessings. You won't be angry if you count your blessings, and everyone could find at least one thing to be thankful for. It's the antidote for depression. You can't be grateful and depressed simultaneously. I rest my case. See you, Forex Gal, and thanks again, Julia. Adios.